M.K. Surana, who's the former CMD at HPCL, joining us on the show. A very good afternoon to you, Mr. Surana. Thank you so much for joining us on ET Now, and you are a veteran in this particular industry. Do you think that given that there has been a sharp fall in the crude oil prices globally, do you think it's time or there is scope for OMCs to go ahead and cut prices of fuel back home?
We need to see in a bit slightly longer perspective because this is a sudden fall and it's a sharp fall from almost 80 to 73 or so. There are 3-4 factors which we need to budget in this. One thing is yesterday OPEC Plus group has not moved for rolling back the voluntary production cut which they had for almost another 2 months. So it was expected that they will probably roll back the production cuts. And so that the fall in the crude prices was also in anticipation that there will be an additional supply of crude oil. And I think OPEC has reacted to that fall in the prices and trying to support their base price on that. That's number one. Number two, the market prices have been fixed for quite some long time. So it is an expectation on the consumer side, on the government side, that there will be a possibility of reduction, especially considering the assembly elections which are coming timing-wise. But we also need to factor in that the refinery GRMs have been weaker, and if you will see, the Singapore GRMs were negative yesterday after a very long period of time. So cracks had been under pressure on the refinery side. Now, whenever the cracks are under pressure, the refinery margins will be under pressure. The marketing margin, if the market prices are same, then marketing margins will be better. But if we reduce the marketing margins also, in that case, we need to see an overall basis. And I think instead of reacting suddenly for a sharp fall, it may be good to watch a little bit and then move forward on that, considering that what is the reaction of the market on the crude prices after the OPEC's announcement yesterday. Now, it will be incorrect on our part to assume that the market is completely disconnected with the supply side situation in the commodity. I think that will be an incorrect way to look at it. Of course, there is a bearish trend on the crude prices that augurs well for the countries like India. So, while there is an anticipation, there is an expectation, but I think we need to tread slightly cautiously considering the OMC's financial health. Otherwise, we need to bring it back the completely variation as per the market guidance.
Right, Mr. Surana. Yes, there are a lot of actually aspects that one needs to watch out, and as consumers actually we always relate the fact that there is a fall in the crude oil prices globally. Hopefully, we will also try and see some sort of cut in the elevated fuel prices back home. But I just wanted to understand about the OMCs. Don't you think the OMCs have already recovered the entire losses that they've incurred earlier, given that the crude prices are now much lower than 85? And you also did mention that the GRMs actually have been weak of late. But when do you expect some sort of a recovery on that particular front, the Singapore GRMs?
As far as MS and HSD marketing margins are concerned, that might be good, but the LPG definitely has been weaker. So when we see the overall marketing margins, we need to factor in the under recoveries on the LPG part also. As far as Singapore margins are concerned, now it is the product pricing and the crude pricing, both are important factors in this. And there are weaknesses on the cracks of MS, HSD. There is also weakness on naphtha crack because of the petrochemical demands down. And in fact, the refinery GRMs does follow a cycle, and there are also seasonal effects. So we need to factor in all that, and maybe at some point of time as the winter set in. Of course, on the Indian side, we have got a prospective consumption patterns improving because of the festivities coming and reasonably good monsoon, etc. But otherwise, the global demand has been weaker to that extent. And therefore, there is a possibility of weaker demand side, bearishness on crude, and slightly lower side GRM. But the marketing margins, if they are the prices are held in a reasonable range, then the integrated margins may be okay. But if the prices are dropped suddenly, and if the crude prices react to the OPEC's decision, then there may be an issue.
All right, then we leave it there. Thank you so much, Mr. Surana, for joining us on the show to talk about exactly what is happening in the crude market, for especially when you talk about the OMCs, and also there is a prospect for going ahead and cutting the fuel prices back home. What Mr. Surana is of the view is that it is too sudden and they should tread with this with caution. There are a lot of factors to watch out for, and not the only factor that we need to watch out for is the fall in the crude oil prices globally. There are a couple of factors that one needs to watch out, especially when it comes to OMCs taking that move to going ahead and cutting the fuel prices back home.
If you like this video, then like, share and subscribe to ET Now.